Ahead of the Bangko Sentral's policy decision, our next guest has been monitoring the Philippine markets from his headquarters in Copenhagen through his funds in China and ASEAN. Peter Lundgreen is the founding CEO of Lundgreen's Capital. His Lundgreen's Invest China Fund is an LSEG Lipper awardee in 2025. It's good having you back here, Peter. Welcome to the program. And congratulations on the China Fund.
Yes, thank you. We are, of course, very proud. China continues to be interesting, so we try to continue our good work there in that direction.
What about in context of ASEAN? Because as you invest in the China funds, you also have some exposure in ASEAN, and within that space, of course, the Philippines.
Yeah. It's a fact that the Asian region is the biggest economy in the world when we compare with other regions. So the best advice we can give to investors is to be here. It's also where we will foresee the biggest GDP growth the next 10 years. So it's always a nice, positive environment for investors to be in. It's not necessarily the most important factor for higher stock markets. That is, after all, how the companies perform, company earnings. But it's a good environment to be in.
A good environment. I mean, just maybe 4 months ago, you were right here speaking to us back in October at the height of the flood control scandal. And we talked about it, talked about the corruption and governance concerns. Looking 4 months on and monitoring the Philippine market and what's went on in that period as the government tried to get bring an understanding, and the Philippine investors an understanding of the gravity of the situation. How are you finding the Philippines now as an investment destination within the ASEAN space?
Yeah, as the Philippines as investment destination has been one of our favorites for many years. We're fully aware of governance issues, and we can only argue and only recommend really to fight whatever there must be of these kinds of risk, of bribery, or whatever we have of governance doubts. So the ease of doing business in the Philippines gets even better. It will be even more interesting for investors to come into the Philippines, both as financial investors in the stock market, but of course also for companies to invest in to Philippines directly and generate more jobs. So
do you think there's been progress in those 4 months? And what sorts of conversations do you get into with your clients when they come and ask you about the Philippines?
Yeah, so this kind of how say it, tractions in an economy or in countries, it's very difficult just to erase. We know that, and it takes hard work for governments, not only one government, but probably more governments over years. But I'm sure that if we look into how massive it was in October, and there were big demonstrations, there were really truly big demonstrations as well. Governments, they listen, and they, as politicians, they see what's going on. So they listen. If they do something, we tend to believe there's an understanding of getting more fairness into economies. But could it be faster? Much faster.
So does that mean you're on a sort of a wait and see when it comes to having clients invest in the Philippine market?
No, we're still pretty positive towards the Philippine investments, but it could get much more if we saw that these government concerns are dealt with in a much faster way.
Did you just say more small?
No, more. So we would increase, as we would allocate more or recommend to allocate more to the Philippines if there were sort of more tough dealing with the governance issues that we see. And
if we compare that interest with the other ASEAN markets, as you know, Thailand's been in constant flux, and the leadership in Indonesia is something that you've been concerned about. So it's not like we're alone there. ASEAN's also got its own issues. So in the order of that, Where does the Philippines stand right now?
Sort of a bit in the mid, sort of in between. Since we met last time, clearly, as you mentioned, Indonesia, our concern about Indonesia has grown significantly. In several dimensions, it is both the politics that is done, sovereign funds that are not sovereign funds, and the big concern also from MSCI that is considering to take Indonesia out of the emerging market stock index. That would be a disaster. And these concerns has actually exploded, I would say, because it is, after all, a pretty short time. Yeah. So some countries have moved in the wrong direction. Not a lot have moved in a better direction, I would say. So the Philippines is somewhere in between. It's not outperforming and doing the most impressive job when we look into the government, but we still very positive on the Philippines.
All right, so if we're right in the middle of the pack there, are we closer to Indonesia or closer to Thailand, which falls in third?
It is, after all, a bit better. Yeah, it is better. Yeah, I would say. Yeah, it's not fantastic. We still have the concerns that were raised last in October, they're still there.
And the foreign fund flows have been coming in, and it's raising a lot of prospects for Asian equities, and a big part of that here in the Philippines. A lot are questioning, why is the Philippine market rallying when nothing's really changed domestically?
Yeah.
But it's the foreign fund flows. I've just spoken with Mark Angeles yesterday. He's one of the local analysts at First Metro, and he said a lot of that is passive funds coming into the Philippines. Given that you're also managing funds, both active and passive, how much of that really is driving the rally that we're seeing in the Philippine equity markets at 6-month highs?
Yeah, it's good, and congratulations also. As we, of course, also happy. We have, since actually October 2022, when the markets really were down, argued to overweight, what we call overweight risk, in particular emerging markets allocations. And this has sort of been a growing trend throughout that period. But in particular, the past 12, 15 months, funds are flowing out of US. So a part of the story is that it's actually a negative US story. People are leaving, and they're finding their way to the emerging markets areas as well. And of course, we are not the only one who argues, say, okay, look 10 years ahead, high growth, nice environment for investors. And that, of course, also spills over to the Philippines. The Philippines are sort of well known for the high growth champion. It should be said that when we have conversations with companies where we see the really direct investments actually typically coming before investors, financial investors like we are talking about here. Latin America is on the rise, and actually also Africa. So there's a growing appetite in that direction as well. So there's different directions, and to say it's positive for the Philippines, and the Philippines is an attractive destination, but we also see a lot of capital out of the US finding new ways.
Right, but we're also seeing that the Fed is on hold. And if and when the Bangko Sentral does cut, and that's a unanimous decision among the 16 analysts that Business World surveyed, that would mean a narrower interest rate differential.
Yes.
So that would presumably mean, funds trying to chase higher yields.
It could be
out of the Philippines.
Yeah, if that is a key driver, some would argue, and also many of the analysts that you are referring to would say this is to support growth in the Philippines. And I would, when I judge what foreign investors looking for right now, is it the yield or is it the growth? And it's basically more the growth story. So that would be okay in that sense, short term.
Like say 3 months?
Maybe even shorter.
Shorter. So where would you put the funds then? If we're looking at shorter yield-seeking growth?
Yeah. Our concern about the monetary decision today, where it really looks like they might come with a cut, I would recommend to stay on hold and also be even more hawkish and also signalize that even if US should cut the rates throughout this year, the Philippines will stay firm and on hold. And this is to protect the value of the peso. It's not the central bank's job to generate growth in a country. That is a government job, and they need to do a good job for that. The job for the central bank is to generate and keep stability. And what we're seeing now is that the central bank could play a bit around with stability, and we do not see a currency crisis in the Philippines as a primary scenario. But this is how a currency crisis can start. And I have 40 years of experience, and we have seen and survived a lot of crises, also currency crises, come through them. What could happen now is that the Philippine peso could weaken too much if they cut the rates today. So my say is it would be an outright mistake to cut rates today. It is much, much more important to signalize a firm hand on the currency that will be attractive for investors. When we see from international investors' perspective, the currency play, when we are talking about emerging market investment, is a very important thing. As do they go for what we call a hedge towards a hard currency, US dollar, euro, or yen, or do they stay in the local currency?
As a final point, Peter, very important point you make. Would that be a deal breaker? If indeed the governor goes ahead and cut today, would you reconsider your positions in Philippine assets?
We would raise our concern. It's not a deal breaker, but we will raise our concern, and we would much more prefer, as I say, hold and actually signalize that the Philippines will stay on hold and concentrate on having a firm currency that ensures price stability on the domestic market. Cutting rates could lead to high inflation, and we have learned after the COVID-19 crisis what an uncontrollable inflation scenario costs.
Well, we'll monitor that decision coming in just a few hours at 2:30 p.m. Manila time. Thank you so much, Peter, for your insights. I much appreciate it.
Yeah, thank you.
Peter Lundgreen of Lundgreen's Capital.